thank you so much again for attending. And really excited. I love these power lunches. These power lunches were a great way of showcasing faculty, our alum, our students, and have been a great way, especially of connecting during the pandemic when people felt the need to connect. So with me, I have, I'll introduce our faculty experts in a second. I have the Associate Dean of the School of Professional Studies, Dr. Laura Persky, and I have my colleague, Tricia Feliciano, who is our graduate admissions director. And so what we're going to do is, for those of you who are interested just in content, stay on. For those of you after the program who would like to ask some admissions related information, stay on, and Tricia and I will be able to answer any of your program and admissions related questions. Just so you know, we offer I represent 4 of the master's programs, as well as advanced certificates in HR management, business leadership, marketing, and for this particular Power Lunch, a Master of Science in Finance, as well as its respective advanced certificate. So with no further ado, I am going to first let you know that, wow, this has been such an interesting year of challenges and changes that have tested some professions, and I see some of you are nodding, and also have brought in new career opportunities. To set expectations for today, we're not going to be experts in financial technology, but rather we're going to get a better understanding of where the field is going and hopefully better position ourselves to capitalize on these new opportunities. It is such a timely topic too. Just yesterday, I'm sure many of you were reading, the top news story was how the US recovered millions in cryptocurrency paid to Colonial Pipeline, from the ransomware hackers, and how the DOJ has created a digital extortion task force. How amazing. Could we have seen that last year? And so for that reason why, I'm very pleased to introduce you to 2 of our faculty practitioners, who will be giving the content and who are experts in this area. JC Fernandez-Seoane is a finance, banking, and markets executive with 30 years experience in financial risk management, in particular in trading, marketing, and selling financial derivatives. JC was head of fixed income and currencies and corporate sales for Santander Bank in the US. And JC has a master's degree in applied economics from Sciences Po Paris and an MBA from London Business School. He's currently working on a thesis on the history of financial derivatives at Harvard University. And JC will be teaching risk management this fall in our MS Finance program. Hello, Jeremy. Jeremy Reams is an experienced corporate development associate at IBM Corporation, a company you might have heard about, located based out of Armonk, New York. He works on acquisitions, divestitures, and finance strategy for the company. Jeremy obtained his MBA from Columbia Business School and a bachelor's in finance from Florida State University. And Jeremy, we're honored, will be teaching corporate finance this fall in our MS Finance program. How we're going to format this is that I'm going to have a few questions to start, and I'm actually going to be starting with a poll, and we're going to try to answer as many questions from our attendees by 1 p.m. We're going to respect your time, and we're going to X off by 1. But before we start, I want to just start with a poll. What are your thoughts, all of you who are here? Is Bitcoin money? All right, while you're doing that, I'm going to first ask Jeremy, Jeremy, what are your thoughts? How will technology affect the world of finance? And I know you can't answer that. Yeah.
It's a loaded question, and it's one that I'm really excited and passionate about. So the last decade or 2 decades, I think we've all realized just the sheer amount of transformation that we've all experienced. I can remember the days when we had just a bulky telephone and you'd make a few calls of it and you'd be lucky if you could get reception. But now you have what in the palm of your hand, one of the most advanced computers for mankind. I think that is in and of itself such a marvel and an accomplishment. But I think what lies ahead of us in the next 5 to 7 years is going to be even more impactful to our entire society. When you think about things such as 5G, quantum computing, artificial intelligence, new data architectures, and the security that comes along with it, these are all things that are going to impact finance, accounting, hospitality, job search. Everyone and everyone's life is going to be just dramatically impacted. Touch on the first one, which is 5G. You may have heard it a while in the background and you realize you have your Verizon or AT&T phone and you said, I went from 3G to 4G, now with this 5G, that's just a new buzzword. I think that it's more than that. With the capabilities of 5G, you'll be able to do things such as have surgery done in real time across the world. You can get insights from your phone or from a laptop computer infinitely quicker than you could for 4G to be able to run artificial intelligence training modules and get real-time feedback that you wouldn't be able to get in today's technology. Doesn't sound like much of a leap, but it actually can completely change the business models and the utility of the technologies we use. The other thing that is really interesting that's going to be around in the next 5 to 7 years is this thing called quantum computing. Now, again, maybe some of you have heard of it, maybe it's just a buzzword to you, but it will impact you in the next 5 to 7 years when quantum computing comes online. In today's world, traditional computing, what it uses is ones and zeros. It's a binary path to be able to get to a decision. Do I do I make a financial decision? Do I not make a financial decision? You do a lot of inputs to be able to get to that conclusion. With quantum computing, it uses this type of the science subfield called quantum mechanics. And effectively, in very simplified terms, it allows you to run multiple scenarios instantaneously and takes things that would have normally taken 1,000 years to compute in today's world in a few minutes. And so that implications to that are tremendous in terms of when you think about financial advisors and analyzing risk, looking at options valuations, and how does that change financial strategies. The other thing it's going to change is a completely new industry is going to be born from a security, preventative security perspective, and then alternative use cases among that. What I'm trying to get at is in the future, you'll need to be able to adapt your career because things have already changed tremendously and people are still trying to catch up, but you're going to need to have the foresight in the next 5 to 10 years of what are the next emerging industries and what are the new skills that I need to think about and adopt now with the great framework that you're learning here at Manhattanville to support all that. I think will really get you ahead of the game. If you have just a general sense of what the market is going to do in the next 5 to 10 years and you get that right, that could be a tremendous upside for you from your career and could be incredibly rewarding to be at the forefront of these new technologies.
Great, Jeremy. I've never felt so insecure about my future. Thank you. Thank you. Although I might want to buy an iPhone in 5G. JC, yeah. I know people have been asking, what are cryptocurrencies? Who are the major players? And it's so interesting to see this poll that 60% people think that Bitcoin is money and 40% say no. Can you help us unravel this?
Right, that's a very interesting poll, actually. I wasn't expecting that. I thought it was going to be the opposite, right? 60% no and 40% yes. So, first of all, thank you for inviting me to this power launch, Jean. I'm very honored to be here and be part of this conference. I would define cryptocurrencies as decentralized ledgers secured by cryptography. So there's, three words that I will define one by one. First, a ledger. If you think about it, traditional money, what we call fiduciary money, is just a system of ledgers. It's account entries. For most of us, our paychecks are just a series of debits and credits in our bank accounts. When we get paid, our employers will have a negative entry in their bank accounts, and we'll have a positive one, a credit. So Bitcoin is nothing else than a shared ledger. Right? The second point is decentralized. The key component of the traditional financial system is that we need a centralized entity, in this case, a bank, to keep those ledgers valid and up to date. How do I know that the money I receive is really there and was not previously spent by the payer? I have to trust the bank. That's why we say that our financial system is based on trust. So Bitcoin's original purpose was to avoid going through a centralized framework by creating a peer-to-peer system that does not rely on trust. And that's the core of the Bitcoin value proposition. The question is then, how do we make sure that this system is reliable, right? If there's no one there to trust. The proposed solution by the creator or the creators, we don't know, of Bitcoin, is that everybody should be aware of all the transactions in the system. If everybody is aware of everything that's going on, no one can actually double spend, which means basically paying twice with the same money. This concept materializes in the Bitcoin network by combining all the transactions into blocks that will be chained sequentially together, the blockchain. And the third point is, or the third definition, or the third concept is cryptography. Cryptography is essentially the practice of encrypting data or information so that it can be kept secret from third parties and can only be read by a private key. So in the case of Bitcoin, it is used to verify and secure the transfer of coins. Users of Bitcoin, of the system, have a public key and a private key that are both encrypted, and that's used to transfer assets. A little bit like a mailbox. Each of us can actually drop a letter or an envelope into a mailbox on the street, and that would be the public key, but only one person, which is the mailman, has the key, the private key, to open that mailbox. Okay. And finally, it's a digital ledger in the sense that Bitcoins do not exist in material form, unlike cash. That's the definition. In terms of, I don't know if you want me to talk about the main players in Bitcoin now, or.
Well, let me just ask, through this poll, is then Bitcoin money?
All right. So the question, I think, should be split in two parts. First, is Bitcoin money today? And if not, does Bitcoin have the ability to become money one day? Because money, at the end of the day, is a contract between us, between all of us, between members of any given society. We collectively agree on what money is. No one can decide on its own that this is money, except the government, of course, which in the case of fiat currency, of national currencies. So to answer the question, I think it's good to remember what the three main functions of money are. First of all, money is a medium of exchange. Instead of exchanging goods for other goods, food for work, for instance, we use a common reference, which is what we call money. It is also a unit of account. We use it to value goods, services, our debts, our wealth, etc. And finally, it's a store of value. We use money to save the fruits of our labor or investments, to preserve our purchasing power, etc. So how does Bitcoin fare along these three variables? Personally, I don't think that as of today, Bitcoin fulfills the three variables, so the three functions of money. First of all, it's not yet, I would think, a medium of exchange in the sense that it's not widely accepted as such. There are some companies that use it, but it's very, very limited. And as I said before, it's interesting because that was the original purpose of Bitcoin. It was a peer-to-peer electronic system, payment system. It is not a unit of account yet, because in nation states, the unit of account is the fiat currency. Here in the US is the US dollar, in Japan is the Japanese yen, or in Europe is the euro. And so this leads us to the last point, which is it a store of value? And Bitcoin advocates, or the maximalists, let's say, put a lot of emphasis on this point, because Bitcoin, they say, is an anti-inflationary store of value. Why? Because a lot of people anticipate that our currencies, the dollar, euro, etc., are going to be debased due to the extremely lax monetary policy that is taking place today in the central bank. So if our fiat currencies are going to lose value because of inflation, Bitcoin should be the preferred store of value. And why is that? Because, as you might know, Bitcoin, the supply of Bitcoins is limited. There's a maximum number of Bitcoins that will ever be mined, which is 21 million. So far, Bitcoin has not reacted positively to the latest inflation numbers in the US. And in fact, it has come down for other reasons. So, it remains to be seen whether it can fulfill the role of store of value. And the question then is, does it have the ability to become money one day? I think Bitcoin does have many of the attributes of money. It is uniform, it's fungible, it's divisible, it's portable, it's scarce, it's hard to counterfeit, but still missing on two counts, which is it's not a stable currency. The annual volatility of Bitcoin versus the US dollar is about 77%. To have an idea of how big is that, gold has 16% annual volatility, and a currency like the euro versus the dollar has a 6%. Even very highly volatile currencies like the Mexican peso or the Brazilian reais have a volatility between 10 and 20%, which Bitcoin has 77%, almost 80%. Okay? And finally, the second count, where I think Bitcoin is not right there yet, is, as I said before, it's not widely accepted as a method of payment.
All right, so our poll was very interesting. We have a very bright group because the answers actually came right in the middle. It could be money, it's just not money yet, depending on how you define money. So that was great. Thank you. Jeremy, and this is going to be a question for both of you. We're going to start with Jeremy. How will fintech and crypto impact traditional companies? I see a lot of people here might be working for traditional banks or traditional companies. So how would you see it impacting traditional companies as well as startups? Because that seems to be a growing area right now, especially post-pandemic.
Absolutely. Well, we're seeing a lot of disruption in financial services, and especially in the payment space. A good example of that is a new IPO that's coming up called Stripe. You have companies like Fiserv, another one called Square, which they aim to bypass the traditional infrastructure of financial payments, which in some cases takes a few days to make payments. But where the technology is going is payments in real time. I think that's one key theme. The other theme here is that a lot of companies are transitioning from calling themselves companies in an industry to a tech company. And what I mean by that is now these days, every company in most industries are calling themselves or aiming to call themselves tech companies. And so when you think about where that leads to in the future, they see the value in the technology. They understand the importance of having a really hyper-defined architecture to make decisions or to get to the next technology, the next forefront to get to a higher value. I think that things are going to continue to move pretty quickly, and I think it'll be exciting for the companies and also for people who are looking for careers.
Fantastic.
So in short, I think fintech is also just getting started in terms of disruption. If I were a young aspiring financier or somebody who wants to get in business just in general, I'd do as much reading as I could in terms of what are the new solutions that are being brought to market. Stripe in particular, its IPO, it's based in New York. And if you're looking for job opportunities, I see postings every day. Would be a good example to go take a look at this new emerging subset of our economy. So definitely take a look at that if you haven't already.
What's so interesting with Stripe, thank you so much, is that I've even heard of it because my millennial kids are talking about it. So it is such a great space to be as if you're starting your career, especially in finance, or if you're still in the beginning part of your career. Any disadvantages do you see?
Disadvantages, I think that it'll be tough to understand what are the most highly valued skills utilized in the market. I've had students come up to me and they said, I got all the traditional finance experience and I found a job just fine, and that worked out for them, and they've done really well in their career. And I've had others who have said that, well, now some of the companies are starting to require a little bit of technical know-how or basic programming skills. So I think understanding what are the best ways to sell yourself as not someone who's too deep in one area or the other area might be a little difficult. But I think that with the help of mentorship through the Manhattanville community, talking to your peers, talking to alumni that you can easily find on LinkedIn and other great technology, I think the more people you talk to, the more stories you get, the better adapted you'll be to figure out what is the right blend of finance, tech, general business experience, and then being able to communicate what it is you want to do with your career. So I know there's a lot of disadvantages, and a lot of people are really worried about change and the speed of where we're going, and I think that's all well and valid. But I think the way to get over that fear is just more knowledge, getting educated, and just talking to people. And then that big wall of fear really starts to come down, and then you really realize what are the things that you want to learn, what are the things that you're interested in, and then it no longer becomes a fear, it becomes an opportunity. So hopefully that helps a little bit.
That was so well said, Jeremy. Thank you so much. Yeah, a lot of us are very fearful. I mean, I'm looking about this new change. If you've been working in finance or if you're just beginning, it's like, there is a disruption. There's a whole new glossary of language that you have to get used to. JC, did you want to add anything to that? Like, do you see advantages, disadvantages, or how it'll impact traditional companies?
Well, I think Jeremy did a very good summary. I would say two things. First, on the job scene, a lot of these fintechs and crypto related companies, they need to build the same infrastructure that traditional companies have. And I'm talking about banks or quasi banks like BlockFi. They need to build the same type of infrastructure in terms of compliance people, market risk managers and controllers, salespeople. So I think there are a lot of opportunities for students that are interested in finance to find a job in those positions. Derivatives traders, so there's many opportunities now. So I think there's only advantages. I guess the disadvantages would be for the incumbents, as any disruptive technology, obviously. And so going back to how does it impact the fintech space, or how does it impact some companies, we'll talk about foreign exchange. Foreign exchange is expensive to send money abroad or receive money from abroad. So I think there's many companies now that will be able to facilitate those transactions without going through a bank and immediately. And some companies already do that by going through a bank, but now we'll see companies that do not have to do that by using cryptocurrency.
Fantastic. By the way, for those who entered late, if you are interested in the master's programs, finance being one of them, or the advanced certificates, or HR management, marketing, or business leadership, just stay on afterwards. We're going to address, prospective people, on the end. Tricia, if you wouldn't mind putting in your email in the chat box if you have any questions on admissions. Tricia is great and she's very responsive. She will get back to you very quickly. And I want to also thank those who submitted some questions beforehand. So I'm going to try to get through as many questions ahead of time, as well as if we do have time to have some live questions. So Lucas Mashenka, I don't know if he's here, but he's one of our students, and he submitted a great question. Will cryptocurrency be able to survive all the regulations that are coming and still maintain its value? Who wants to get that first?
I'll go if you don't
Great,
mind.
thank you.
Uh, I think that's a very good question. First, an observation. I think as long as we are citizens of nation states, it is quite naive to believe that cryptos are out of reach from national governments just because they are decentralized. I think it's also unrealistic to believe that they will not, those governments will not regulate them. So, but on the other hand, I think that regulation can be positive for cryptocurrencies in the long run. First, some level of regulation directed at protecting investors should reassure newcomers to the crypto world, and without all the weakest players, like in any disruptive technology. Now, long term, the question is whether there is room for 4,000 cryptocurrencies and hundreds of exchanges. The second point is that I believe if cryptos succeed in becoming a substitute for national currencies, governments will intervene and will intervene much more heavily, as we have seen in some countries like Iran, Nigeria, India as well. You know, success actually could bring their demise in the sense that, you know, it's a threat for the national currency. So by regulating this space, I think governments can define the boundaries of these instruments, so they don't become a threat for the national currencies. Like gold is not a threat for the US dollar today. Right? So I think that this would mean that cryptos could survive in parallel to fiat currencies. Instead of maybe cryptocurrencies, it would be crypto assets, if you wish.
Right.
And finally, I think that governments are starting to show, the fact that governments are starting to show interest in crypto is a good sign. You know, it's a clear sign that these assets might become mainstream at some point and become another investment assets. You know, Gary Gensler, which is the new head of the SEC, said regulation is coming. I think this should strengthen the long-term prospects for this business, especially that Gary Gensler knows very well the crypto world. So I think sensible regulation is actually good news for crypto.
Fantastic. Jeremy, did you want to say something on that?
Yeah, no, thanks, Jean.
Yeah.
I think that it kind of brings a good point where sometimes you'll read articles, you'll have one extreme or the other. If you read one article, it says it's going to, the dollar is dead, it's going to be completely devalued, put money under a mattress or go buy gold or buy Bitcoin. On the other hand, it could be the opposite, that, the dollar is going to come and eviscerate all these digital assets. And I think it's going to be squarely in the middle. And what JC was saying, that is that more regulation, I think, would be positive. I think that could lower the sheer amount of volatility and provide a little bit more transparency in terms of who's really doing what in the market, and to limit some of the scams out there. I think that if it does stay long term, that it'll be more viewed as a digital asset rather than a currency that you're going to use every day when you go to McDonald's and you make your purchase, or you buy Tesla with your Bitcoin. I think I have a few rare examples of that, but my opinion is it's going to be more viewed as a store of an asset rather than something that you're going to use on a daily basis. But that one is just my opinion from my perspective. But I think by and large, you're going to have something that's going to stay for the long term.
Interesting. Thank you. Thank you. Hi, Eileen Gruz, a friend of SBS. Nice seeing you. Will the generation of cryptocurrencies be replaced by central banks or cryptocurrency in the future? Will crypto valuation continue to be driven solely by supply and demand and speculation, or do you see something being introduced to flatten the volatility a bit? So thank you. That's a great question. Do we know?
Yeah, I think if I might answer, I think that's a very relevant question, because to me, in my opinion, central bank digital currencies are coming, whether we like it or not, even if some central banks like Canada is saying that, well, we don't use it, we don't need it yet, etc. I think central bank digital currencies are probably the most relevant threat to cryptocurrencies in their ambition to become means of payment. Again, I'm talking about means of payment, not store of value, as Jeremy said. Because central bank digital currencies will have the stability, acceptability, and liquidity that free floating cryptos like Bitcoin are missing. Also, I think that they could, central bank digital currencies, they could inhibit the growth of the stable coins, which are cryptos that have a fixed value against the national currency, and especially those that are not decentralized. Because the question for me is, would you rather have your money in digital dollars backed by the Federal Reserve, or in a cryptocurrency that is issued by a private company, allegedly this cryptocurrency backed by the same US dollar? For instance, Facebook's Libra or Diem. I see that credit risk with the Facebook currency that you don't have with the digital dollar, right? And there was an example of Tether, which is a stable coin that came out a couple of weeks ago, where it's supposed to be backed by 100% of dollars, of US dollars, and in fact 50% of the reserves were commercial paper from companies, etc., which might be high credit, but still not US dollars or treasury bills, treasury bonds. So in my view, central bank digital currencies have an important role to play as a means of payments, and actually I think that at some point they can totally replace cash, like we see in some northern countries where only maybe 2, 3, 5% of payments are done via cash.
Very interesting.
And now, so on the question of will there be intervention to flatten volatility? I don't think so. I think manipulating the price of Bitcoin or these cryptos would be contrary to its philosophy. Bitcoin's main value proposition, maybe selling point, is the fact that it's a totally decentralized asset and therefore free from government intervention. So the government has definitely, I don't see interest in reducing Bitcoin volatility, and intervention from large holders of Bitcoin could be seen as price manipulation, which actually could trigger government intervention. So I don't see that happening.
Very, very, thank you. Jeremy, you're nodding your head.
Yeah, I was thinking in the back of my mind, if the central banks are more or less interested in the technology behind Bitcoin and cryptocurrency, which is blockchain. So if you're not aware of blockchain is a distributed ledger that is shared across multiple users to be able to understand one source of the truth as you track and monitor where it could be dollars, it could be Bitcoin, where it goes, and along the way, the users of the chain will validate whether or not the transaction has been validated and if currency has been exchanged. But I had a question back to JC. What do you think about central banks using blockchain as a potential use case for their ability to track interbank transactions or transactions with other government entities?
So I think that the ironic thing here is that cryptocurrencies, which came as an opposition to centralized money, if you want, with central bank digital currencies, they don't have to be blockchain based, really. I mean, you don't have to have a blockchain. So we can find a situation where actually the legacy of the cryptocurrency invention is centralized currencies by central banks, which is, at the end of the day, ironic. So I think this is, as I said before, this is something that is coming and it will stay there. I think probably cash at some point will disappear and is replaced not by Bitcoin, but by central bank digital currencies, by digital dollars or e-yuans or digital euros.
Very good. Thank you. We have another submitted question. Dr. Chris Pappas, one of our biology professors, thank you so much for being in attendance. I think he's been doing his reading. What is the best long-term investment in cryptocurrency based on proof of stake systems? So, Chris, I think that you've been studying a little bit about this.
So you say, so yeah,
Right, read that
answer
again?
No, that's fine. So yes, I think proof of stake. Well, first of all, proof of stake is another type of consensus mechanisms. We have not really talked about how the cryptocurrencies are mined, but it's a different type of consensus mechanism to validate the blocks in the blockchain. So it's different than proof of work in the sense that like proof of work that Bitcoin is based on proof of work, in that the miners of currencies under the proof of stake system, which are called validators, are chosen at random to create those and validate those blocks. So, I mean, I'm not going to give advice on which one is the best coin or the best token to make money on proof of stake on the proof of stake basis. But I think that the biggest ones are Cardano's ADA, which also has actually a limited supply, 45 million coins, or BNB from Binance. Ether, which is the native coin of Ethereum, is actually moving to proof of stake, so that would be very interesting, and actually it's going to be probably the dominant coin in that space.
Jeremy, did you want to add to that?
Yeah, well, I think that the intent is the question is where would I place my money? I'd say incredibly cautiously, and be sure if you have learned much about finance, the importance of diversification. Some of the latest periodicals I've read is that there's a little bit more comfort level with using cryptocurrency as another asset class, just like you would use gold or small caps, large caps, bonds, or cash. However, even when you have the diversification, it's still incredibly low levels, depending on your risk tolerance. So if the ask is where you'd place your money, I'd say you'd make sure you diversify many maybe coins or many different companies that would be doing the harvesting of these types of coins. So that's my approach.
I think also that in terms of accepting, I think the question about accepting Bitcoin in a retail store, for instance, to me is the same issue that accepting a foreign currency. If you accept, and I come actually from a country where many currencies are accepted to pay. So what you do is basically put a big margin, because by the time you actually sell your crypto or your foreign currency to convert into your native currency, you might take a hit on the price. So if you accept Bitcoin, obviously with a daily volatility of 4 to 5%, as I said before, a yearly volatility of 77-80%, you have to put a little wiggle room on the price to make sure that you don't lose money. And that's why I think it would be difficult for cryptos, especially those volatile cryptos, free floating cryptos, to be widely accepted as means of payments, as opposed to stable coins or maybe central bank digital currencies.
Excellent. Right, so we do have a little time for some questions. So if you do have a question, I'm going to try to address them. If you can put them in the chat. So we have a question from Anna Fine Jewelry. All cryptocurrencies, blockchain, are all cryptocurrencies blockchain validated? Coming from the jewelry industry, I'm seeing Bitcoin accepted on 47th Street in New York City. This is not something I'm personally doing in my fine jewelry business. Yeah, jewelry might be a place where it might be accepted. So that's a great question. But are the currencies validated? You said no before, right? JC, you're thinking. You're right. You're my person. Yeah, I'm going to talk to you. I'm going to first start with you. What do you think?
So I think taking a step back is how is crypto really working and being created, right? And so at the origin, yes, crypto and Bitcoin in particular uses the blockchain. You don't have to use blockchain to have crypto, but as I said before, but the blockchain is the fundamental or foundation of cryptocurrencies, and miners choose transactions and put them into a block to form a new block, right? So the way it works is that the block then needs a signature to be added to the blockchain, and this signature, which is called proof of work, as we were talking before, proof of stake, they do so by finding a number to validate this block. I think there are about 1 million Bitcoin miners today, which actually 2/3 are in China and only a small part in the US. So I think, yes, the foundation of crypto is blockchain, but I don't think all of the cryptos are based on blockchain.
Wow.
Question 2 was, what advice would you offer, and what are some of the risks you see in accepting this form of payment? And I think the risk, JC kind of said it, is, let's say you accepted a big payment and you sold a nice diamond ring. A few days later, it could be worth 5 to 10% less, or 5%, 5-10% more. So effectively, because of the volatility, it's a little bit of speculation in terms of the payments you're accepting. And as a business owner, you need to understand those types of risks. Because if you need to make your lease payments, make payroll, and then all of a sudden the cryptocurrency you had accepted is worth 10-15% less, and you need to pay them out in US dollars, that could be a problem for your business. So my advice would be extremely cautious, and if you do accept that form of payment, I would probably translate it over US dollars sooner rather than later, and then anything above that, you're incurring a risk that could be a little bit more speculative in nature for your business that you'd be willing to take.
And I think it's absolutely true that you read sometimes in the news, more companies are using Bitcoin. It's not quite accurate, because PayPal, you don't pay with Bitcoin, you can actually buy Bitcoin through PayPal as an asset, right? It's not that you can pay things with Bitcoin. And also, most companies that use Bitcoin are based in countries that have a problem with debasement of the currency, like Venezuela. Burger King in Venezuela, for instance, they use Bitcoin, of course, because the currency is worth nothing. So, as I said, and as Jeremy said, for a retailer, that you have risk, that you need to put a margin. Even Tesla has stopped accepting Bitcoin, and which is supposed to be the most tech-savvy company, and because the volatility is too great, you need to put a price 10%, maybe 10% above the normal price in US dollars to have that wiggle room, that cushion.
Very good. John asks, environmental impacts and electricity costs of mining are increasing in the news with Bitcoin. Will there be a problem for more long-term in 1 to 4 years from now?
Yeah, well, I think the problem will continue to persist, especially if it takes more energy to mine more of these coins. But I think I'll defer to JC on that, and that's just my hunch.
No, it is an issue. I think that there's a lot. It depends on where the coins are mined. Right? China still uses a lot of coal. Most mining rings in China have 2/3 of their energy sourced out of coal. But on the rest of the world, hydroelectricity is very big. So I think, and this will probably be evolving. And I think I think that sometimes you hear that, the Bitcoin industry or the cryptocurrency, the Bitcoin industry uses as much energy as Switzerland or Norway. I think, we're talking about the whole world mining cryptocurrency versus a country, right? So you need to compare how much how much energy is used by the banking system, in the whole world. Obviously it's much more. So I think it's an issue. I think that the proof of stake, which I talked about before, is a solution as well, because it uses many less resources, in the sense that not everybody has to validate the blockchain, but only a certain amount of nodes, of peoples, of computers, which are chosen at random. So I think there will be, as in life, there will be a solution coming up in 1 to 4 years. Probably we'll have a solution.
Very good. Thank you. Thank you. All right. I had one more submitted question, and then I'll try to summarize everything. Justin Billick, what does the future look like for the practicality of cryptocurrency in everyday life? And I think you both referred to this a little bit, but do you see this? Am I going to be able to wave my phone and
I think if the volatility goes down where it doesn't move 5 to 10% a day, then perhaps there'd be a likelihood. I think you'd have to ask yourself as a consumer, why would you, what's the benefit? If you could just pay at, a few stores and it's only adopted for a few, you'd really have to see utility to use it. I don't see that. Maybe there's a broader vision and you feel good about using cryptocurrency because you're not part of the US dollar system. I can understand. I just don't think you're going to have a wide enough group of people who are going to think that way to create an effect that you would want to switch over to Bitcoin versus the US dollar. So I think the US dollar is a pretty hard incumbent to beat. I think you're going to have to overcome that.
Very good.
And let's not forget, absolutely, let's not forget that we are paid in US dollars, right? So if you decide to buy something with crypto or with, again, a foreign currency, you're taking a risk. As long as your assets are in dollars, as long as your pay is in dollars, by switching to a different currency, you're taking a risk. And the question is, would you do that to buy a coffee? Or would you do that to buy a car or anything from Amazon? Why would you do that? Jeremy said it, unless you are someone that is, against, as a principle, against a centralized currency, as a centralized system, yes, I understand why you do that. But I think most people, in my opinion, would be just a hassle. Again, central bank digital currencies might solve this problem, but also it's a centralized system.
Very good. Thank you. I have been remiss that I would like to introduce Laura Persky, the Associate Dean of the School of Professional Studies, who has made today possible, as well as our past and future power lunches. Laura, please say hello.
Hi, thank you, Jean. Not remiss at all. I just really wanted to jump on and introduce myself to everybody. What a fantastic attendance we had today. Thank you, Jean, for coming up with this idea, and to JC and Jeremy for willingly participating and sharing your knowledge. I'm trying to keep up, but it's really great. And we just appreciate you both as faculty and as supporters of SPS. And thank you, Dominique, for organizing this event and sending out the reminders and sharing the registration. It really does take a village to put up an event like this and create community, which hopefully this content lunch helps you all see that we have a really strong community. We have faculty on staff, alumni, current students, and very importantly, prospective students. And if anyone is interested in learning more about the School of Professional Studies, please stay on. Our wonderful admissions counselor, Trisha Feliciano, has just put her contact information in the message in the chat section. She also has a Calendly link. Another technology new thing where you can, sign up for an appointment right away without calling and asking what time are you free. I love this tool. You just, go in and see when they're free. So really just thank you, Jean, JC, and Jeremy, my 3 Js. Thank you all. And thanks everybody for attending.
Right, so before so I sort of I'm going to do a quick summary of what I at least learned. So my top 5 takeaways, and you can tell me your top 5, but one, look into Stripe's IPO and all the opportunities, as well as other fintech opportunities. It seems like the world has pivoted and there's a lot of great opportunities. 2, learn about fintech or financial technology. I printed out a handy glossary. I don't know if you can see it, but we're going to be expected to learn a whole new language. Thank you, Jeremy. Proceed with cautious regarding crypto. Thank you, Jeremy and JC. Maybe if you're not comfortable with the volatility, you might have to wait it out until it becomes less volatile. My 4th takeaway is perhaps take a fintech class with JC this spring. It's going to be offered in January. Our spring term starts in January. And my 5th takeaway is if you're really interested in finance and you appreciate the quality of our instructors, as I said, Jeremy is going to be teaching corporate finance this fall, and JC is going to be teaching risk management and corporate finance, risk management. I'm going to add cybersecurity. These are tremendous growth opportunities. It's a great time to get into the world of finance. So keep in touch with the School of Professional Studies. I will be sending, you my thanks, and I'll be, of course, sending my email along with that. So if you have any questions, you want to continue this conversation, I would love to meet with you individually or with Tricia. And again, if you're interested in any of our master's degree programs, as well as advanced certificates for fall or for spring, stay on. And Tricia, Laura, and I will stay on to answer your questions. And for those of you who are just finishing up your lunch and you need to go back to your job, thank you so much for attending. It is such a pleasure, especially this time, to connect and see friends and students and alum and prospective students. So thank you again.
Thank you.
Thanks for having me, Jean. Appreciate it.
JC, thank you. Jeremy, thank you. Have a great day.
Thanks. You too. I appreciate it.
Thank you.